What's going on, everyone? Charlie here. We have a filing to talk about out of the IEX exchange. This is IEX-16 and it regards retail price improvement. So I'm not sure if you remembered, but they made a rule a couple months ago, and it was to change retail orders to where there could not be an algorithm basically trading on behalf of retail. It has to be a natural person, so keep that in mind. Now, the purpose, the exchange proposes to modify the definition of a retail order set forth in IEX Rule 11.190B15 for the benefit of retail investors. Specifically, IEX is proposing to revert a recent change to IEX Rule 11.190B15 so that retail orders can once again be submitted on behalf of all retail customers without the requirements that the retail customer submits no more than 390 orders per day on average. The exchange proposes to make this change to offer the benefits of the IEX's Retail Price Improvement Program to as many retail investors as possible. Now, they implemented the retail program on October 13th, 2021. Subsequently, and notwithstanding prior informal feedback from members and market participants, IEX became aware that several existing and potential RMOs have not implemented a counting methodology to determine the number of equities orders submitted by each of the retail customers, as well as by retail customers by broker-dealers that route retail orders through the RMO. As a result, such RMOs cannot submit retail orders to IEX because they are unable to reasonably assure that such orders would be in compliance with the recent changes to IEX Rule 11.190B15, which specifies that retail orders may only be submitted on behalf of a natural person who submits no more than 390 equity orders per day on average during a calendar month for its own beneficial accounts. Thus, while the 390 order threshold was intended to limit the use of retail orders to retail investors who did not appear to be engaged in trading activity akin to that of a professional, it has had the unintended consequence of limiting the number of actual retail customers who are able to obtain the beneficial execution opportunities offered by the exchange's retail program. As discussed more fully below, no other equities exchanges restrict retail orders in the same manner as IEX, and IEX believes that this factor may impact the willingness of members representing retail orders to devote technology resources to implementing accounting methodology. Accordingly, IEX proposes to revert the recent changes to the definition of a retail order that limits retail orders to customers who place no more than 390 equity orders per day, on average during a calendar month, for their own beneficial accounts. Thus, IEX proposes to delete the last sentence in IEX Rule 11.190B15, which imposes the 390 order threshold, as well as supplementary materials 0.01 and 0.02 appended thereto that specify how RMOs should count orders for purposes of determining if a retail customer has placed no more than 390 orders per day, and establish new compliance requirements for the RMOs with respect to the 390 order threshold. IEX notes that no other exchange with a retail price improvement program restricts retail orders based upon the volume of trading of the retail customer, and that the proposed changes to IEX Rule 11.190B15 will make it substantially similar to those exchanges' definitions of a retail order. As noted in the retail program update filing, the 390 order threshold is also used by CBOE EDGX exchange with respect to its equity market, but EDGX only uses the 390 order threshold to delineate retail priority orders that receive execution priority over most other orders resting on its order book. EDGX continues to allow its RMOs to submit regular priority retail orders for retail customers without any assurance that the retail customer submits no more than 390 orders per day on average. Furthermore, IEX notes that nothing in this proposed rule change will modify the pre-existing compliance obligations of RMOs to assure they are the only submitting retail orders on behalf of actual retail customers, not algorithms. IEX believes these ongoing compliance obligations of RMOs will continue to assure that they only submit retail orders to the exchange that represent the trading interest of natural persons. Now, statutory basis, the Commission has consistently emphasized that the U.S. capital markets should be structured with the interests of retail investors in mind, and the proposed change to the retail program is explicitly designed with that goal in mind. Specifically, reversing the recent change to the definition of retail orders at IEX is designed to benefit retail investors by providing enhanced opportunities for as many retail investors as possible to obtain meaningful price improvement. IEX believes that encouraging the submission of more retail orders to the exchange should attract increased contra-side liquidity seeking to trade against and provide meaningful price improvement to such retail orders. So basically, they're going back over a rule they changed previously, eliminating the 390 order limit rule. And this should benefit retail investors by providing more enhanced price discovery, more liquidity, and meaningful price improvement. There you have it. IEX-16, jack to the titties. Let's go.